Bitcoin Whale, I'm Chris. Here's what I'm seeing in the chart today. Bitcoin's in one of those spots right now where the honest answer is nobody really knows which way it breaks. That's fine. Here's what I'm actually seeing. Quick recap first. Yesterday, Bitcoin was at 64,209. Right now, it's 64,098, essentially flat. No trigger fired, which means yesterday's setup is still live today. On the 4-hour, the last few days have been carving out what looks like a falling channel. I'm going to build it out line by line right in front of you. Don't just take my word for it. Half the people calling direction on Twitter right now, they're positioned already. Long, they see up. Short, they see down. We're skipping all that. Chart first, opinions nowhere. First line, the ceiling, dropping in descending resistance. Anchor up at the cycle peak, that's around 64,234, and drag it down to the most recent lower high. Watch where this lands. A line only means something if price has actually respected it. Look, price has tested this line more than 5 times and got turned away every single time. That's about as validated as a line gets. I'm marking the clearest rejection points right now so you can see the pattern yourself. Project that line forward to today, and it sits right around 63,931. Write that down. That's the number bulls need to clear. Not a wick, a clean 4-hour close above 63,931. That's the trigger. Real quick, if these levels are actually useful to you, hit subscribe. I run through Bitcoin like this every single day. Now let's drop down to the 1-hour. The 4-hour gives us the structure, but the 1-hour is where the actual entry lives. On the 1-hour, the recent range stretches from about 59,130 at the bottom all the way up to 65,860. That's roughly 10% wide. And right now, price is sitting down near the lower end of that. Fast-moving averages on the 1-hour, 20 sitting at 63,408, 50 at 63,749, and price is above both. That's the averages stacked correctly, which is a clean bullish red on near-term momentum. All right, let me get back up to the 4-hour. We need to finish the channel. For hour, second line, the channel floor. It anchors back at a swing low near 82,850 from when price was trading much higher and slopes down through every lower low since. This is a descending floor. It's not flat support. It falls with price. That's what a downtrend channel does. This lower line has held price more than 5 times on the way down. Projected to right now, it's sitting around 62,891. Keep printing lower lows along it, and the downtrend stays alive, and a clean break below, it doesn't signal a bottom, it accelerates. There's also a fib retracement on the 30-bar swing dropping in at 60,755. That's the next structural reference if price opens up below the floor. 2 lines, but a channel by itself only tells you so much. The interesting stuff comes when you start layering other indicators on top. Right around $63,419, several of my levels all land in the same area. That's a confluence zone, not one clean line. When different methods point at the same spot, that's not a coincidence. Funds, retail, algos, everyone's looking at the same zone. Dropping a horizontal there so you can see exactly where it sits. So what's the bigger picture target? The pattern runs about $1,039 from top to bottom, and when channels like this break, price tends to travel that full distance. That's the structural target, the swing move. In a second, I'll give you a tighter intraday entry inside that. But this is the direction the measured move is pointing. The historical record backs this up. In a falling channel, every bounce is a fade. You sell the rallies into the upper line and ride them back down. A channel this well-defined has a tendency to keep doing exactly what it's doing. That's why I follow the structure instead of my gut. So how do we trade it? 3 scenarios. Scenario 1, bulls push through. A 4-hour close above 63,931. If that prints, my target is 64,970. That's where I'm taking profit. Scenario 2, bears take control. A 4-hour close below 62,891. Same math, opposite direction. Target is 61,852. Stop right above the level that just broke. Keep size small. Scenario 3. And honestly, this is probably the most likely outcome. Neither close fires. We just grind sideways inside the range. If that's what happens, you do nothing. You wait. In a market this compressed, patience is the edge, not activity. That's the full picture. One path up, one path down, and probably a whole lot of sideways in between. 3 levels, and a market picks which one matters. You're reacting to a confirmed trigger, not prepositioning on a guess. Here's the actual trade. It's a short, pulling up the 1 hour to walk you through the entry, the stop, and the target. I'm not chasing this lower right here. I want to short a rally back up into the recent swing high, which is around 64,350. Stop at 64,623, just above it. That's where I'm wrong, no argument. Target sits at 62,420. Risk-reward on that works out to about 7.1 to 1. I don't force trades where the math isn't clearly in my favor. The reward has to outweigh the risk before I even get interested. And this only activates on a confirmed close. A wick through doesn't count. Size it at 1% of your account, not your whole stack. And if today's breakdown was useful to you, hit the like button. It genuinely helps the channel, and it's how I know these are worth making. That's today's Bitcoin Red. Watch the triggers, not the noise, and I'll be back with the next one.